Welcome back to the Modern Day Trader Podcast. Very, very keen for today's episode, very keen for today's guest. It feels like it's been such a build up and we were supposed to shoot and we didn't because life happens sometimes. But Gareth Shaw, welcome to the podcast, bro.
Thank
I
you.
think
Thank you very
we'll
much for having
explain.
me.
Yeah, keen for this
Welcome,
chat.
welcome, welcome.
Gareth will explain, obviously, what he's about throughout this, but I think this is just going to be a different take because Gareth plays a lot more in like the futures, options, and equity space, and not so much Forex CFDs, which is what Marcy and I's background is. And so that's the purpose of this, I guess, and we want to expand, I guess, our knowledge of the trading environment as a whole. And this is going to be a really dope conversation that does that.
Obviously you a new person to the platform, and so my first question would be just on your background. Can you just give us a little bit of an explanation of who you are, where you're from, and then also how did you get into trading? How did this whole journey begin to get you here today?
Mm.
Yeah, so it's quite a long story, but if I can do it as quick as possible, I had a job that paid me pretty well, and then I wanted to start investing. So I invested in a company. Actually, it was my friend who gave me the recommendation for them. And then they were just losing me money every single week. I'd get my statement, I was down 15%. And then the contract stated that I had to keep depositing. And then eventually I had a lot of money. It was over 20,000 euros in that account. And then I decided, no, I need to surrender this. Like they're just losing my money. And I was tied to it for another like 10 years, I think it was. So I'd have to be putting in minimum 200 euros per month for the next 10 years just for them to lose it. Um, and I
Crazy.
was like, okay, now I need to start learning about investing myself because I can't let these other people do this.
Mm.
So I surrendered it, and I think I got back 6,000 out of the 23,000, and they kept all the rest. They said, "Yeah, sorry, that's the surrender fee." So once I'd signed, it was literally just I literally just signed my savings away, or like a big chunk of it. Which is a lot of months of work. That I mean, it's in rands. That's over 400,000 rand, just gone,
Literally.
almost 500,000, like overnight. So I decided to start investing, and then at the same time, it was when like the whole crypto boom was going on, when Bitcoin had just like started pumping up. So I was like, okay, let me just learn about all of it. So then I jumped online and I was like, okay, what is Bitcoin? What's this and that? And then I decided, okay, I'll just do a course, which was cheap. So I was like, okay, cool, just to learn what Bitcoin is. And then in the course, they went through trading, like actually day trading crypto. So I was like, that's cool. Let me try that. And like most people who try to trade crypto, unless you're a whale, you're gonna get burned. So I did. I lost a lot of money in a short amount of time, which was great. And then I don't know, I just fell in love with the actual trading aspect, but I hated crypto. So I first got into options, and then long-term investing. That's actually where it started, just to like try and make back some of the money that had been pretty much taken from me.
Sure.
So I started with just long-term investing, trying to figure out what stocks to buy,
Mm.
um, just knowledge and stuff. And yeah, I started my long-term portfolio back then. And then while this was all going on, I was kind of like learning while everything was going on. And then the guys were like, they were telling me like, oh no, but it's gonna come back. We know we've been losing your money now, but it's just because the Magnificent Seven are pumping, but everything else is down, and we're buying bonds, and all of this pretty much, yeah, like it was a load of rubbish, quite honestly. And I knew that then, but I didn't know when I signed up. When you sign up, they use a bunch of big words on you to
Sure.
rope you in. So for the listener out there, like just be very careful. If you don't know about investing, ask someone who knows, because there are sharks out there and they will take your money and a lot of it. So just be very careful. But anyways, yeah, now after I knew a little bit about investing and I'd started investing myself, then my portfolio was actually up 20% at the time. My own portfolio, when their one was down, I mean, it was doing negative 15% every month. So I was just like, hey guys, this isn't substantial. And that's why I pulled it. I bit the bullet and pulled it. And then it was all kind of going on the same time, kept my job, and then got into options for day trading. Um, did overall very average at that, up until I started trading spreads. But I was always looking for something to actually day trade. You know, spreads is kind of like I'll explain it later when we get to that. But I just wanted to look for something to day trade, and then futures popped up. And the thing I liked about futures is that one, there isn't a massive spread. So I know you Forex guys, you know, you open a trade and you immediately draw down.
Mm.
Whereas for us, you open and you flat, you know.
Yeah,
So I enjoyed that. And then the prop firm space is huge in futures, so you can trade other people's money.
sure.
And that's where I got to till today. You know, I've been trading futures for probably close to 2 years now.
Yeah.
But luckily for me, the jump wasn't big because when I traded options, it was all technical analysis on SPY, and now it's
Mm.
just changed to NQ and ES, which are all correlated. So my technical analysis hasn't had to change really.
Geez, interesting journey, and you've kind of touched on a bit there. But I just want to take it back, like just a little bit before we get too deep into the technical side, because obviously in previous conversations you've mentioned you're from Limpopo side, and I think that's just one very dope thing about the pod. It's like NK's from Durban, KT is from the Vaal, so it's also Gauteng side, but it's like guys from all over the country and trading at the end of the day, it's like a really high performance career, and it's like you stumble across it for whatever reason, but it doesn't just kind of work by accident.
Mm.
And you've taken certain steps and like had to choose to take certain steps to progress through it, and eventually get to a point of profitability, which was rare and like really impressive. So maybe just keen to understand like what about those early like working years that maybe shaped you as like an individual to almost become the kind of person that is fit for trading because like not everyone is.
Yeah. So that's a big thing is I don't think trading's for everyone. So,
Mm,
you know, if you're listening to this and you're not sure if you really don't want to make it and you're not that eager, then the sooner you give up, the better because you'll lose less money, right? And that's a horrible thing to say, but if you're someone who thinks they can do it, you know, I'll back you 100%. You know, I was there. I know what it feels like. Um, it takes a lot of resilience, a lot. Like the amount of frustrating days you're gonna have, you know, it's not just a win or a loss. You know,
mm,
there's days like today for me, you'll be winning the whole day, and then all of a sudden one candle will take you out. You know, and it's
mm.
just takes a lot. It's such a mental game. Like it's fatigue on your brain. And I guess the jobs that I had before were very long hours. Like it paid well. I worked on the yachts, so it was, you know, I'd like often on charters and stuff, I'd have 16-hour days, you know. You'd eat like a cereal bar the whole day. And you're doing honestly 10 Ks of walking each day. Like it was a lot.
Crazy.
But I don't know. I don't think that necessarily that shaped me. I just really enjoy it. Like I love looking at the charts. If I'm
Mm,
sitting on the couch watching TV at night, like trying to relax, I'll open up the charts on my phone and just, you know, scroll through and have a look at what's going on, you know, just for interest
sure.
sake. Like I think anyone can do it. I say it's not for everyone, but I think just like it's for anyone who wants to do it. Like if you want to
Mm.
and pursue it, you will do it.
Yeah, I think to summarize it, you almost have to be obsessed in a sense.
Mm.
There
Yeah.
has to be some level of obsession.
Gareth, I wanted to ask you before we get into the strategy and technicals, do you think that because you're quite young at the moment, we're all young, do you think losing 350 to 400K in rands probably, or did it make a change in some, like, did it flip a switch in your brain at some point to say, I just lost that, and if I lost that, like taking an L on the charts is it's just another L? Like, did it take that, people attach this value to money,
Mm.
uh, that makes it harder to take a loss and like objectively look at that loss on the charts and say, what can I learn out of this? Did
Mm.
that whole process of losing money through the investing, obviously, that you invested prior to starting your trading journey, did that impact you in a good way or in a bad way? What did you say?
That's a very good question. Um, to be honest, I haven't really thought about that whole scenario much. Like there was quite a gap in between when I took trading very seriously and when that happened. It definitely helped for sure. Like if you can lose that, I mean, I never want to feel that feeling again, quite honestly. Um, but trading, like you're gonna lose, like I still lose. I still have losing
Mm.
days. I still have losing weeks, but I just know that over time I will make money. Um, that being said, put me on a paper trading account where I'll be a millionaire tomorrow, put me with live funds and it's a different ball game and
Sure.
that's coming from someone who's been doing it for long. But the only way to learn is to have skin in the game. And unfortunately, you're gonna lose money learning. Like it feels shit. Like whether I lose $200 or $2,000, I feel shit. But quite honestly, it's not really about the dollar amount for me. It's more about the what's it like my conviction being wrong, like
Mm.
I want to take a trade. I think this is where it's going. And for me, like taking an L is more about I was wrong instead of, oh, I lost this much,
Mm.
which is actually something I learned later on, which is actually I find a good habit to have. I don't look at dollar when I'm trading, I don't look at dollar values. I look at the chart. So when I place a trade, I enter it in my brokerage. My brokerage isn't even open. I have my trade there, I have my stop loss, and I have my take profit set. The only time I open it is if there's any reason that I should move my stop loss to break even.
Sure.
Other than that, I let the trade run.
Yeah, and I think that's what gets a lot of people. It's
Hmm.
people struggle with risk management not because I think there's anything like difficult or like hard about it, but it's just because you're attaching too much importance to the actual sum of money. It's like,
Hmm.
and that goes into like a deep psychological chat around, what value of money, are you accustomed to seeing? And like when you see that on the charts, like how does that like make you feel? Because of so many different things, but literally just making it simple and focusing on percentage return or R multiple even.
Hmm.
Um, so many people would not be, I think, doing back and forth or blowing accounts if they took a different approach to, I guess, managing risk. Um, but I think that's a good segue into strategy side of it. And you obviously said you started out on the option side and you still do play in that space. But you've been trading futures for about 2 years and you have a longer term equity portfolio. So I think the access, I see it as, there's a analysis strategy side of, your approach to the market and there's, an access, how do you actually take your investment ideas and, translate that into the market. So maybe let's start on the strategy side first. What does your technical, or even it doesn't have to be technical, there could be a macro or fundamental component to that, but how do you approach the market basically? And how did you learn, I guess, the strategy you're trading now? Does that go back to some of the courses you did initially? Did you develop the approach on your own? Just keen to understand the way you view the markets and how you kind of got to that point.
Okay, so before I jump into like my actual daily routine, which should explain it. So I'm mainly a premium discount trader. Now that is my main thing is premium and discount. Um, when it comes to that, I do take in some ICT concepts, but like really minimal. I'm not an ICT trader, I'm not looking for, there's 100 order blocks, breaker blocks, all of this. The only thing
Mm.
I use out of ICT is higher time frame order blocks and lower time frame fair value gaps. Um, that being said, so how I learned to trade, my strategy now is kind of been shifting, not shifting, but tweaking. So I had a strategy and just refined it. Now, premium and discount kind of also stems on Fibonacci. Now, I'm not a Fibonacci trader by any
Sure.
means, but why Fibonacci works is that when price, when price moves up, it's going to come down into a discount, right? So Fibonacci is exactly that. It goes up and then it comes down into the golden pocket, they call it, which is the basically 71.8% retracement.
Sure.
But why I think Fib works is because it's coming into premium discount. Now, I've just been tweaking it over time. There is a trader called Kane, a British guy. I think he currently holds the record for the biggest prop firm payout, which was, I think he did like 1.8 million US in,
Insane.
it was like 3 months. Insane.
It's
But he's
competing
one
with
of the
Jade,
best.
with Cow.
And he shows all of his executions. That being said, if you're watching this or listening, be very careful about who you choose as your mentor. If they are not willing to show you their trades live and they're not willing to show you an actual account and they're not paper trading, you should not be following them. Trust me. The worst out of all of them is TJR. Now, I actually used to be a fan of him. And then I just figured out, no, something's wrong here. He's the king of, he goes on stream every day and he says, oh, okay, no, I'm going to take this trade, that trade. And then after the trade's done, he's like, oh, okay, cool, I won. He's like, yeah, here's my executions or whatever. But he doesn't show the actual executions. He just draws on the short to long position. And then another
Yeah,
day he'll be like, oh, okay, no, I lost today. But it's like just to make it more realistic.
sure.
And then he's got this whole thing about, oh yeah, but the traders in my Discord need to learn for themselves. They can't just piggyback with me. He's basically gaslighting you into paying him more money to watch him not trade and just be live. Like, and people are paying it. He's a
Yeah,
multi-millionaire, so that irritates me. Then Kane shows all of his executions. That's why I really liked him. He's got no bullshit. Like if you ask questions in the chat, he'll reply. And I really, really resonated with him. So I was like, okay, cool. Let me learn from him. And his strategy and mine are very similar. Funny enough, actually, a lot of days, like if I see he's going live on YouTube, whatever, for free, I'll be in a trade and I'll literally jump on and like we'll be like a few ticks off of each other's entries, but we'll be like
sure.
in the same direction. Like we trade very, very similarly. So I learned a lot from him. If you're watching this, he's a very, very good source to have.
Sure.
And yeah, so I kind of just tweaked it. I don't necessarily trade exactly the same as him,
Sure.
but a lot of it is very similar. So
So,
that's
sorry,
how.
quick one. So you didn't actually, I don't know if he has a course, but you didn't actually get a course from him. It's just he obviously creates content for free and you've just followed him over the years and his content has helped you refine your own strategy.
Yeah, so he made a lot of content for free. I don't know if it's locked now, but now he started a Discord. And you have to be in the Discord to access a lot of like the stuff.
Mm,
I'm not in it now because to be honest, like I don't really like following other people's trades. I'd rather just trade myself.
sure.
But I know that if you do log in as a whole, I used to be in it, and if you do log in to that Discord, there's like a whole bunch. It's actually quite reasonably priced
Yeah.
compared to what others cost. But yeah, there's a lot of education. There's someone streaming live every single day, and you can learn a lot of value from watching other traders live. And then as for my daily routine, first thing I do is I check the news. I'm happy to jump into a trade before news, but if we getting close to the news, if I'm near break even, I immediately close before the news. If I'm far away from break even, I'll probably move my stop loss into profit, like
Mm,
an amount that I'm happy with. And then I'm happy to let the news run. I've had it go against me a few times, where it just takes you out, but you're still in profit. And I've had it
mm,
go for me, and then you can have a very big day, depending on what the news is. But that's how I trade around news. So I'll check news. If there's no news, perfect. I'm happy to trade. I'll kind of jump on between like kind of end of London session. And then I've just marked out my Asia high, my Asia low, previous day high, previous day low. Then I jump to the 4 hour. I mark all my liquidity on the 4 hour chart, jump to the 1 hour, mark all liquidity on the 1 hour. Now I've got my liquidity level set. On the 1 hour, I'll look for my higher time frame premium and discount. Now that's the range that you are in, right? So let's say price goes up and then breaks that low, goes down. That will be your range. Now halfway through that range, that'll be your premium, that'll be your discount. So what I'll do is I'll wait for price to retrace and I'll find my reversal setup inside of that premium zone, because now I know its price has come up, it's balanced out price action, and it's going to come down. All right. My profit target will be, sorry, that is for my continuation trade. Now my reversal trade will be when I break the previous range, so go down, and then I'll wait for my reversal setup, and then I'll target the first liquidity within premium or discount if I'm short, if that makes sense. So I've got my liquidity level set out and in my range. So let's say here's the range, I break below, here's my new range. Halfway is my premium. The first liquidity level I have there, that will be my liquidity. And then I also use deviations. So it's just on the fib tool, you can do different settings.
Your Asian range, like deviations of that range.
No, so on my, I'll quickly tell you my settings on my deviation. So if you go into the fib tool, you just set 0, 1, -1, -2, -2.5, -4, -3, and -3.5, and 1. And then basically you just draw on the 5-minute chart from your very low to the previous high. So let's say we're coming down the very bottom to the previous high, right? And then that will send up a whole bunch of deviations, and it's basically just price likes to kind of go back to those. If it's going to have a move, it likes to go about that far before it comes back. Just to kind of give you an idea when you should start to look that maybe it might reverse. If it hits liquidity, that's when you worry it might start reversing. Up in between liquidity and no deviations, I'm happy just to let a trade run. I don't think that there's anything going to stop it. Does it happen? Of course. Yeah, that's the markets. You can never completely predict it.
Have you noticed a particular deviation that your trade would hit usually, or is it just you target the one that's closest to liquidity?
No, so deviations I like for reversals. So what I'll do is, like, let's say I break a range, and now I don't know where it's going to stop. When you break a range, now it's free falling. You don't know when it's going to reverse. So I'll draw my deviations from the top of that range, all right, the previous range. And then normally at those deviations, not normally, but it's all about building conferences, right? Now, I would say more often than not, even if it's 51%, that's more often than not, it will reverse there. And it's just something in your favor. The more you can put in your favor for a trade, the better. So that's how I use deviations. Yeah.
Okay. I think that makes sense from like the lower or micro time frame, like entry perspective, but just going way back up to the high time frame. So is the highest time frame you start on, because I know you said you use high time frame order blocks, would that be on like the daily or weekly? Or are we talking from like
order blocks are like on the 4 hour. The highest I go is, I'll probably check like the weekly. I'll maybe check it, but I don't draw anything on it.
Sure.
But I check then the daily I check, I'll draw up my previous day high, previous day low, and then I'll kind of look what the previous day candle looked like, because that can tell you a lot. And that also goes, if you're listening to this, the best piece of advice I ever got for my trading is take everything off your chart. Trust me, I had it all. I know what your chart looks like. You got RSI, you got Bollinger Bands, you got VWAP, you got everything on your chart, and your chart is a mess. Take it all off, and for a month, look at your chart every single day and look at just the candles. Blank chart, just candles. And I promise you, it will change your trading when you learn what price action moves like just based on candles. That is your foundation, and then you start adding on top of that. And someone gave me that advice, unfortunately, way too late.
Yeah.
But I did it, and it really, really did change my trading.
That's a game changer, and I think that's a lesson a lot of us learned when we like transitioned into like price action trading. But something I think additionally on top of that, I do this daily where it's like I clear my chart mainly on the 1 hour. Literally like strip the 1 hour, 4 hour and daily and stuff that can stay, because that's not going to change over the course of like a week. But it's done so much in like helping me break out of like certain like biases, or like break free from like having certain biases or carrying biases over into the next day, where you kind of start each day with not on a fresh slate because your high time frame's the same, but
Mm.
I may have been looking to take the entry from, one level that's just above premium or just below discount. But with a fresh view the next day, that was maybe me forcing the position and it actually, and looks like it's going to come a bit deeper either way. So yeah, I just found that's really cool, just building on top of the thought that you had there
Yeah,
around
no,
looking at
it's
price.
really
I
focused on
actually
price action.
Exactly, Gareth. I actually did that same thing when I was focusing on price action, and what I actually done was to reverse engineer a candle. So if you're looking at the daily time frame and you're looking at one candle, you know that in the daily time frame there's four 4H or six 4H candles, and in one 4H candle there's 16 15-minute candles. So if you can kind of reverse engineer and look at how a particular candle was made up, you can sort of start to anticipate what happens more often than not. Do you know what I mean? So if
Yeah.
you know that the daily creates, let's say, at a 60% chance that it creates a high in Asia or right after Asia, that then means that if I get to the charts at London, if on any particular pair it does do that, then there's a high chance that it had already created the high of the day. What is going to happen now? Are we actually going to create the impulsive push in the direction that it wants to go in? And like those types of things can take you and change your trading and take it to another level where you can start to see the movement before you actually do like your technical analysis, but you can just start to anticipate where price action could go to just based on price action alone.
I understand your continuation entry with your reversal entry, you wait for a shift of the 1 hour structure and then you said there's like a reversal confirmation that you look for. Can you maybe
Yeah.
just shed light
Yeah, let
on
me
that?
touch on that. So just to basically sum up all of that ranting, right? My reversal is when I break the range, I create a new range. Now I'm waiting for it to reverse to go back into premium or discount, right? Inside of that new range. If like today's trade was a continuation trade, if I have a range set, it's already reversed, it's come now into premium or discount. I then look for the reversal, all right, the reversal of the lower time frame move up, which will
Sure.
be the higher time frame continuation, targeting now
Continuation.
the bottom of the range, because now I expect it to come into that premium discount and it's going to go back down and it's going to take out the low of the range and continue to make a new range, right? In the high time frame direction.
I see.
As for my setup, I look for liquidity getting taken, or I look for a high time frame fair value gap, right? So fair value gap is the only ICT like strategy that I actually use. I look at the 3 minute, the 5 minute, and the 15-minute charts at all time. After I set up, the only time I'll look at the hourly chart is when the new hourly candle forms. So like what Marcy was saying, right? Every candle is open, high, low, close, or open, low, high, close. All right. So if the new candle opens, let's say I'm in a short position and it runs up first, then I'm happy because I know it's just setting the top wick. It's going to be open, high, low, close. All right. So it's going to continue lower. But if I'm in a short position and it shoots down immediately with no top wick, I
Danger.
know it's likely going to come back. All right. That's danger. And that's when I look at the 1 hour. But other than that, I'm just looking at the 15, 5, and 3. My entries on the 3, the 5 I just kind of glance at, and the 15 I glance at just to like make sure that there isn't anything on there I should see. Like if it's still looking quite bearish, but on the 15-minute chart, it's kind of looking like a reversal, then I'll maybe close the trade. Or at least just move my stop loss a lot closer that I'll lock in some profit. I don't really like to trail close. I like to let a trade play out. And for most of the part, I let my trades play out. But it's just in those cases that I'll look. As for my strategy, I look for a move. So let's say I'll use today's example. We were in a higher time frame range. Price came in a downtrend. Price came up into premium. I was looking for my reversal. I got it was a lower time frame uptrend. I got a change of structure, leaving a 3-minute fair value gap. It's a 3-minute fair value gap going up, and I had a break of structure going down, and that inverse 3 fair value gap, that is my entry on the bottom of that fair value gap, the inverse one. And price, I promise you, For some reason, it goes up and it taps it and goes down. The amount of times I've taken trades where I've been in one tick of drawdown before getting a full move is quite often. Otherwise, it usually doesn't go above that fair value gap. My stop loss will be the previous high, but as soon as I get a move down, I'll move my stop loss above that fair value gap just to limit risk, and then I'll just let the trade play out.
Yeah, no, fair value gaps are very powerful. I've been seeing something similar with the precision on those entries. Found it interesting just jumping from the strategy, which is actually very similar to I think how Marcy and I kind of go through our processes. But you mentioned you started in options and it wasn't too much of wasn't too difficult to kind of transition into futures. And that's something I've been thinking a lot, is that essentially as traders, we're trying to find the most efficient way to translate our analysis and strategy into, I guess, profit, call it that. And there's so many different ways to do that, whether it's through Forex, futures, options, and you trade, the range of them. So just kind of keen to hear from you why feel like futures or options are the best space to do that. Understanding that there's differences in terms of like Forex being primarily like OTC, over the counter. You're at the mercy of brokers. Swaps and commissions are so fucking expensive for what? It's like I was calculating my swap fees today on my challenge account. I'm paying 17% or have paid 17% so far. And it's like, that's mad. But I guess you're obviously paying the broker. There's obviously differences in like settlement. Forex, you kind of just, you can keep the position open as long as you have the margin. And futures works with like maintenance margin or something like that. I know options, you kind of pay a premium up front. So kind of thinking about all of that and like what sort of frictional costs there are in accessing the market. Maybe tell us a bit about why futures or options are where you decide to kind of play right now as opposed to the CFD space.
Okay, so options I've done forever. Options, what on nice about them is that your fees for options is you pay a fee, which is, I think it's like $1 a contract, all right? And then it depends completely on the brokerage, but most of them are like $1 a contract to open, $1 a contract to close, right? I let them expire. If you let them expire, then you don't pay the closing fee, all right? You just pay to open it. Now, let's say I buy 10 contracts, right? That's $10, but 10 contracts can make me like a lot of money. Like if you're trading SPX, 10 contracts can make you $1,000 like within 3 seconds, depending on how volatile it is. So $10 is not a lot, right? I trade credit spreads, so I short options. Let's say price is coming down, I'll short a call and then I'll buy a call a little bit higher. All right. I'm not going to explain options because then we'll be here forever. But if you're listening and you understand options, let's say SPX is coming down. What I'll do is I will short a call at a price that I think that price will never get to for the rest of the day. It's all 0 DTE. And then I'll buy another call just as a safety net, a little bit above it, so a higher strike price. And basically, I know that the one that I buy is going to expire worthless and I'm going to lose 100% of the value. But the one that I shorted is also going to lose that value, but that I make because I've shorted the contract. So I'm not buying a put and buying a call. I'm shorting a call and buying a call, right? That is for when price is going down. And then it's puts for when price is going up. And the only reason that does that is because each contract with the strike price has a different value because of intrinsic value. So now the intrinsic value of those options contracts, all right, are slightly different because of the dollar. I mean, if you're trading SPY, it's a dollar per strike. SPX is, I think, 10. So what happens is I will gain all the intrinsic value from the one I shorted, and then I'll lose all extrinsic and intrinsic from the one I bought. But it's fine because of the intrinsic value difference between them. I collect that premium. Now, what's nice about it is that you can buy far out, right? So let's say I'll quickly look at the chart now for SPX, where we currently are at recording this pod. We are on the 1 hour chart, right? We are at 5316 on SPX. Now, if you look at the hourly chart, it kind of looks like we are coming back up. We made a high. It kind of looks like we're giving a low wick sort of daily candle. All right, so I've got that in mind. Can we take out the bottom? Sure. Can we take out the top? Sure. There is a gap above. So what I'll do is I'll set an order kind of like up at let's say 548, right? So now that's given me a big gap, and I think price will never get there, right? And that's why it is so safe, is because, and why I have a 90, it's like my win rate on this must be over 95%. I hardly ever lose. But the thing is that if you do lose, you lose big, right? So that is the downfall to it, and you need to know what you're doing, and you need to know when to be able to pull it, right? Especially check news, because news can push SPX in one direction very, very quickly. And also what it can do is if news that wasn't forecast to come out comes out, like Trump posting something, it can burn you very quickly. I've watched people blow accounts like within seconds. So you need to know exactly, what to do. If you want to do it, I do post a lot of mine to my stories and stuff. But for the most part, you can, I quite regularly will make $100 to $200 a day, and that's in my brokerage. That's not a prop firm. So, I make it today, I can withdraw it tomorrow, and it's 4,000 Rand, this week I've only taken one just because it has been a bit terrible. I'm not dumb at the same time, but I made $250, like there's $5,000. That's my weekend sorted for not lifting a finger really. But for the most part, I like to take one every single day. I've had months where I don't lose one day of the month, and then that turns big. I mean, that's about $4,000 to $5,000 a month, for something that's relatively risk-free. Yeah, and then as for futures
That
is,
sounds that sounds crazy.
yeah.
Hmm.
But remember, I've got a big account, so there's
I was
quite a lot
actually
of
just going to ask you about
margin.
futures so you can get into futures.
Well, just to quickly touch on that, I do have a big account, so don't hear what I'm saying now and then think, oh, okay, you know what, I'll chuck $100 in and I'll start making it 200 a day. Like that's not how it works. I used to get excited about making $20 a day, then I used to get excited about making $50, then $100, 150. Now I'll make $200 to $250 a day. When I do take one. Today's not looking like you kind of want a directional day, and right now it looks like we're getting quite a reversal. So probably not. It can go either way. Either we're gonna go back down and it will be a continuation day, or we're gonna go up. But either way, it could take you out. So that's not what I like. And then I only take them within 2 hours left of the day, because there's still enough decay on the contracts to make you money. And then at the same time, it's leaving less time for it to go against you.
That it makes perfect sense. Makes perfect sense. I heard everything. I wanted to ask you, going back to futures, as Sam mentioned, obviously you play in both options and futures, but for me, the focus is more so on futures, just because you mentioned there's literally no spread in futures. You're not paying brokerage fee, you're not paying anything, and literally the challenge that myself and Sam done, we took the commission free account, but then because we trade in Forex and OTC, they charging us with a spread, and that spread that gets charged, it ends up being quite a bit of like, if you just take break evens, you'll end up going down. If you take 10 break evens, you'll probably go down 1 to 1.5% on your account, just based on spread if you trade in a 1% risk. So then what are the advantages of trading futures over Forex or even options in this case? And then, like, if I'm looking to transition from Forex, let's say, for instance, what are the things that I need to look out for when trading futures or getting
Okay, so
into it?
that's a good question. I actually know a lot of people that have moved from Forex to futures, but less so than options to futures. Now, options have a lot of strategies, right? Which are why I trade them. Options can make you consistent money if you know what you're doing. You can lose a lot of money if you're going to buy naked puts and calls. You're going to lose money, right? For day trading, options is, I don't know. I don't think it's great. That it's called theta. It basically is time decay, right? So the closer you get to expiration, the more it just loses and loses value. So you're basically fighting against yourself. Now I've had, you can buy an option and price can just chop like this, chop like this, chop like this for 2 hours, and then you can move a little bit in the green, and now you're in profit, but you'll be down on the day. You'll be red because that time is now decayed, right? So that is why people move from options to futures. Now for Forex, all right, the one is the spread. When you buy options, where you click buy is where you're going to get. Now you might get slippage if it's very volatile and you click buy market, sell market. But if you set like a sell limit or a buy limit, you are going to get filled at that price, and that is your price. When you're above it, you're making money. When you're in that drawdown. Another thing that I like about NQ or ES is one chart for everyone. Whereas in Forex, from what I understand, you guys can look at the same asset, but it's spread out between different, I don't know where, like Oanda or
Will depend on
whatever
the
it is.
broker.
You guys
Yeah.
can, yeah, it's depending on the broker, right? And from what I hear from a lot of Forex traders, that there's actually slight differences in the prices, all right, between those. Whereas NQ and ES is all from the CME, which is the Chicago Mercantile Exchange. And it's just one chart that everyone looks at. So everyone's looking at the same thing. Buyers come in at certain levels and sellers come in at certain levels based on what's happening. There's no slippage, all right? And then the other thing that brings a lot of people to futures is the prop firm space. Now there are a lot of prop firms, and what that means is that they're all fighting to get your money, which means that their prices are very low for doing evaluations and activation fees for those prop firm accounts. So I know that a lot of people have come over just because of that reason. I mean, yeah, that's
And then, so I think you've touched that you trade mainly NQ and ES. And I think when we were chatting before, we spoke a lot about, like, obviously Forex is very cheap to get in broker. You can open R100 account. How, for someone who doesn't really understand how it works, how does it work with futures, understanding that there's like mini contracts and micro contracts? How does that work in terms of like then following like some sort of risk management like process? How do you go about determining how many contracts you'll put on a position?
okay. So this is also what I like about futures is it's very easy to understand the pricing, right? Quickly touching on that. Sorry, I only take trades on NQ, but I am always watching ES for uh correlation, right? I always want them to be correlated. Now, what I do like is it's one thing I didn't touch on the strategy earlier, but I do like an SMT, which basically means that ES will make a new low, NQ won't. And that difference can often mean that there might be a reversal, right? So especially when I'm looking at profit targets, if ES takes a profit target, a liquidity level, and NQ doesn't, then I start to get wary, right? So just gonna quickly add that in there. But going on your question, right? So NQ, all right, and ES, you get micros and minis. Now, a mini is bigger than a micro. A mini moves $20 per point, right? So it's $5 per tick. There's 4 ticks in a point. And then a micro is just 1/10 of that, right? So let's say you have a trade and there's like 100, or let's say 20-point stop loss, right? Then that means multiplied by 21 contracts is going to do you $400 of loss. Now you can't afford that. You're going to need afford $40 of loss. So you buy one micro instead, right? I've had it lots of times where one mini is too much. Too little, and two minis is too much. So I'll buy 15 micros, just slap bang in the middle. And then, sorry, that's only for NQ. For ES, the pricing is different. I actually forget, just because it doesn't do as much as what NQ does. It's a little bit cheaper, but to be honest, like because they're correlated, it's quite balanced. So if ES goes, on the charts this much, the dollar value is pretty similar. I forget what it is just because I don't actually trade on ES. I don't buy contracts on ES.
Sure.
But yeah, it's very simple to do your calculations. You can quickly on your chart measure, let's say my stop loss is 58 points. I know multiplied by 2 will give me $116 if I buy 1 micro. Okay, that's cool. And I'm like, okay, well, I have $200 of risk that I want to put on. So I can stretch for 2 micros on that. I'll go a little bit over my risk, but so. And then you can obviously just multiply whatever you get by 10 if you want to buy a mini. If that makes sense.
Yeah, true. And I mean, if you're looking at what $200 risk, if you want to say 1%, that's like $20,000 count. 0.5%, you can obviously make that even lower.
$100,
But what sort of starting balance do you think is reasonable for someone to get into the future space, whether it's index futures or currency futures or commodities, whatever?
If there's anyone new that wants to get into futures, my biggest advice to you, I'm going to drop a lot of knowledge here that I wish someone told me. The first thing, do not quit your job, especially if you start winning straight away. Do not quit your job. Keep your job until you get those losing patches, because everyone wins at the beginning and then they lose and then they win. And that's the cycle for most. Some people just lose and then win, and some people just never really get it right. Keep your job until you're consistently pulling money out of the markets. All right. If you have $100 and you want to trade it, the best thing you can do is take it back, put in your wallet, and paper trade, right? Just start learning on paper first. There is obviously, I do think it's good to have skin in the game, like I mentioned earlier, but I'll get to that. All right. Paper trade, until you consistently doing well there. And then what you do is, okay, now you need to now understand the what happens to your mental when you start losing real money. So then what you'll do is you will start putting in a little bit or buy an eval for a prop firm. And then you need to see how you start to do, where you're losing actual money, because a lot of people do very well on paper trading and then they get to real money and it is a completely different ball game, right? So keep your job, paper trade. Like I said earlier, take everything off your chart. You're going to get, especially when you start, because you don't know who to look at, you're going to get people telling you this indicator works. It tells you when to buy and sell. If someone's telling you that it's this easy to trade, right, why would Wall Street not be listening to them and doing exactly what they're doing? Just step back and think about what this person on social media is telling you for a second. All right. Think, if it's that easy, why are they plumbers? Why are they carpenters? Why are they engineers? Why are they architects? Why are they doctors? Why would anyone do that when trading is so simple? You can just make millions right here. All right. Think about it carefully when you start looking at people. And then that being said, if you can then start trading real money, all right, and be consistently pulling money out of the market, that to the point that you start making more money trading than what you do in your day job, then you can think about quitting your day job, because it is quite exponential. So when you start making money, it starts to really starts to pour in, all right? So that is my best advice. And then if you want to open your own brokerage instead of an eval, honestly, I'd say about $1,000 is enough that you can actually place trades with risk to give yourself a fair losing streak. You can risk $100 to try and make 200 sort of thing. But if you're just going to put in $100, you're going to have to Hail Mary that, because there's not a lot of trades with a stop loss that's less than $100 in, and maybe you'll do it. Maybe you'll turn that 100 into 200 and 200 into 400, and then you'll have some sort of a buffer, but my best advice is just rather keep that money in your pocket, buy stock, buy Apple, buy Amazon, buy Nvidia, buy Meta, whatever you want, some blue chip stock, and just let that money just be making a little bit of money while you learn, but yeah, if you think you know how to trade and you want to open a brokerage instead of going with the eval route, then my answer is about $1,000.
I think I'll disagree with that, and I'll say $1,000 is too low because at minimum $100, you're risking 10% per trade, and some people you can lose 5, 6 trades in a row. That's 60% of your account gone. Your mental is spiraling at that point. I'd say minimum $10,000. And if that's the case, if you don't have $10,000 on hand, then by default, the eval route is where you should start because you can leverage then what the prop firms are offering. Just don't gamble with evaluations because there's this thing to gamify the system, and everyone just tries to get through evaluations so quickly. But those are the modern day tools that we have, and I think you should use it. If you can't start an account that allows you arguably at least 15 trades losses in a row before you either blow the account or violate the
I agree
rules.
with you there. All right, I would never risk 10%. The reason I said 1,000 is 1,000 is your bare minimum that you could actually go somewhere, right?
Sure.
I've had funded accounts go down to $200 of drawdown, and I've pulled them. I mean, that's my last trade. One more trade and it's blown. I mean, I've blown lots of them. I'll be honest. Any profitable trader has blown evals lots, and even fundeds. I've blown fundeds as well. But that's how it goes. Sometimes depends on your strategy and the market conditions. But I've also had accounts that have gone down to $200, and then I've taken them up an extra $5,000 over the threshold and taken withdrawals. So the reason that I say 1,000 is, I guess it's an amount that people, if you put 10,000 in, yeah, you can have better risk for sure, but I've seen people blow that as well. So for someone starting out, that's why I just like to keep it small.
Sure.
But I mean, $1,000 is still a lot of money. It's 18,000 Rand. But if you have money to throw, obviously the more the merrier. Let me put it that way. The more money you can put in an account, the less your risk will be. On my actual brokerage account, which I've traded futures on it before, and I'm liable for futures, but on my actual account, I'll risk. Let me work it out. I think it's below 0.5%,
Sure.
to make a percent, and I'm happy with that. So yeah, don't get me wrong. I'm not saying go out there and be a cowboy, but that's your minimum. And I've built that account up for a very long time, right? It wasn't overnight. No one just gave me a big bonus and said, yeah, have fun. I built that up with options, selling, etc., etc. So that is why, that's why I said what I did. But obviously, the more the merrier.
Yeah, I hear you. I think it's actually a perfect segue into the next topic. I think risk management for most traders, they'll associate what we're going to go into with risk management, and touching on risk management and also the advice that you gave to new traders, Gareth, about thinking about who you actually going to look at as a mentor, and then thinking about the trading. So I wanted to actually start, because I know this is a big part of what you wanted to speak on, which is psychology. And so to me, I wanted to ask you to just expand upon the moment in your journey when you realize psychology plays a fundamental role in your success as a trader.
Right, to be honest, I've got quite a controversial mindset on the whole trading psychology thing, right? I don't think that you get a trader who has great trading psychology and shit psychology in the rest of their life, or vice versa. I don't think you have someone who's got, okay, maybe vice versa, someone who hasn't learned trading losses or whatever, but they'll get it quicker. I think that psychology as a whole don't read books about trading psychology, rather read books about actual psychology. Like if you are active on the charts and you discipline and whatever, but you can't help but go to McDonald's because, you got no discipline there. Like they clash, right? If you're disciplined in your real life, you're going to be disciplined on the charts. If you,
Mm.
and, people don't like hearing that, because people are lazy, people are, they don't want to have discipline in their real life, but they're like, oh no, but I can jump on the charts and and then they'll take one winning trade and they'll be like, oh, you see, I told you, And I'm like, okay, well, show me your
Mm.
log of the last 3 months of what you look like. Show me your trading calendar, then I'll believe you. So I believe that psychology really comes down to the person. That's why I think trading isn't for everyone. Like there's just some people that just probably shouldn't do it, and that's the hard
Sure.
truth. But
And I think so I was gonna say it's that thing
Yeah.
of, how you do anything is how you do everything.
Everything.
Yeah, in a sense. And that's why trading is like, it's for me the purest form of like success, because you cannot be a successful trader unless you are a successful individual or have the traits of a successful individual. Because like you're saying, it's you can't put this mask on that works when you're at the charts and then do the complete opposite
yeah,
everywhere
exactly.
else
Yeah,
in your
yeah.
life. It makes no sense.
Yeah.
Um,
No, you at
yeah,
home cheating on your wife, and then it's like, oh, but I just can't help myself. Then you jump on the charts. You're like, okay, yeah, he has my risk management, he has my rules. I'll stick to
sure,
these, and I'll
sure.
like, just they don't
Makes no
add up.
sense.
Sorry.
Yeah. I think it probably takes learning a bit about how to apply those principles to the chart. And I think starting with like just psychology content in general is a start. But it's
Mm.
like, for example, it's like to know that that means it's just sticking to one strategy kind of thing, like discipline. Like, what does discipline look like in the market? It's not, you know, you can show up every day and like have this routine, like morning routine, and like do everything else. But if you get to the chart and like your decision making is just terrible and inconsistent, then you'll never get consistent results, kind of thing.
Yeah,
So
exactly.
I think where traders struggle is bridging the gap between, the knowledge, like the strategy we are talking about earlier in session, and, how do you actually apply that, or create a system and then
Mm.
stick to that system that works over time without feeling tempted to change something every single time the market, you know,
Yeah, it doesn't give you
hurts
what
your
you want.
ego or like disappoints you. Like, sorry, it's like, unfortunately, that's gonna fucking happen. Like,
Yeah,
pick yourself up
100%.
and move on
I
with it.
mean, at the end of the day, like you cannot be 100% correct. You cannot, like, the amount of times today, so I don't know what it was, but some news took me out today. Like I was doing so well today, and then news came, boom, took me
Mm,
out. Like Trump can wake up and you know his wife, she's she's cranky about something, so she's shouting at him. Now he wakes up on the wrong side of the bed, and he's cranky, and now he's tired of the tariff news, so he tweets something, right? Your
sure.
trade gets taken out. You on the other side of the globe, right?
Mm,
Your trade gets taken out, and you're like, well, why did this happen? It's my strategy. It's my strategy. It's like
mm,
there's a good story in Trading in the Zone. There's a very good story about a guy who's the best technical analyst in
mm.
the world, pretty
Another
much.
story.
Have you read it? Yeah,
I'm
yeah,
listening to the
and they're trading.
audiobook now again for like the fifth
Yeah.
time. But
Yeah,
you,
yeah, and he says like, okay, he was losing money, best technical analysis in the world, and he goes and works at this big firm, and I think they were selling soybeans.
mm,
One of the commodities is soybeans, and basically he said, okay, this chart is coming down, short it, it is coming down, and the big boss said, why do you think it's coming down? No, no, because of this and this and this. So he phoned the secretary and said, buy however many lots of soybeans. Price shot up, and the guy's face went white, and he's like, "Oh my God!" He's like, "Literally, this is what's been getting you wrong. Is that you hold on to these losing trades because you have to be right, but it's not the case. Anything can upset the market. It can go in any direction. I've had
mm,
days where I'm like, okay, my reversal must come. It's only been going up. Price can't only go up. It'll finish the whole day up, and then we'll open the next day down. Like
mm,
what are you gonna do? That's how it works.
yeah. And I
Um,
guess to sum that, like, point or example up, it's one of, I guess, what he calls the fundamental truths. Like there's a random sequence between wins and losses for any given set of variables that defines an edge. And
Yeah.
you've just got to believe that, honestly. Like you don't know what the outcome of the next trade is going to be. You just got to know that over a large enough sample set, you'll either be on the red or you'll be on the green. And if you're in the red, then back to the drawing board and fix what's not working, whether that's with yourself or the plan.
And that's it, you walk into a casino and, tell me who's gambling the most in the casino. It's the dealer. The dealer's there the whole day. He's gambling. He's winning and losing. But the casino has an edge. Why has no casino ever gone bankrupt? Why are they all around? Why are they all making so much money? It's because they know that, yes, they might lose the first 10 hands, but over time, they are going to win because they have an edge over the player. That's why casinos win.
Yeah.
And, it's the same with trading. Like, but now you just got, I don't like to make an analogy between gambling and trading, but basically to sum up an edge, you need to be the casino now, right? You need to find an edge that is higher that you win than what you lose and stick to it. Whether you're winning or losing, you stick to that edge, because if you lose, you're going to win eventually,
Yeah.
Gareth, so this is the rapid fire question section, right? So basically with the rapid fire question, you have 30 seconds or 2 sentences to answer the question. So I'm just going to fire the question and you need to answer it in 30 seconds, right?
Let's go.
Okay, let's go. So first question, future, options, or equities? If you could choose one forever, which one would you choose?
Equities.
Mm.
Equities, because it's the safest.
Okay, perfect. Your worst trading mistake that you've made?
Spending too much money learning instead of paper trading, and then keeping risk low, losing a little bit to learn. I got excited and put in too much money.
Interesting one.
That's perfect. That's actually quite interesting. That's quite interesting. One thing you wish you knew when you started trading?
One thing I wish I knew is where to find valuable information. It's very easy to get sucked into the traders who are driving around in Lambos and showing Rolexes. But if I could do it again, I would, because now I can spot them from a mile away. If I could do it again, I would find out where to find valuable information.
Okay, where do you think that you'll find the value information?
If you find any trader online that is for futures, it's Kane, Patrick Wieland. There's another guy, Big Daddy Max Options Trading. Those are the top 3. There's another one, Trades by Matt. Sorry, all very good guys. If you don't know and you don't know if you should follow someone, if they can't show you every single day their entries and their exits live, then they're not a real trader. Be very careful as well. TradingView has bar replay. So people go into bar replay, they say, okay, this is why I'm taking this trade. And then they just click play and it goes down. But like they already knew where it was going. So that's not live. When I mean live, you need to see that the price is ticking and you can see where their entries are and that, their P&L is going up and down. That's what I mean by live.
Okay, perfect. Last one. Your biggest trading win ever, or if you don't want to touch on that, your biggest milestone in trading ever?
Those are actually the same thing. My biggest win was an options trade. It did over 1,000%. And I think I did $13,000 on that.
Yeah.
Nice. Do you guys want to give your final thoughts to the people before we actually wrap up?
Yeah, I know that if you're listening to this, maybe my strategy might seem a little bit complicated. I'm still new to the whole social media game, so feel free to reach out to me. I don't have like that many followers, and I'm always helping people. Yeah, and I'd be happy to help anyone and explain my strategy on a Zoom call with you for the cheap price of a follow. I'm not going to charge you anything. People gate kept when I was learning, so I'm happy to give it out for free. I've got nothing to gatekeep, or at least not now in my journey. But But
Love it.
yeah, just keep pushing. I was exactly where you were. If you are in a position where you are butting your head and you think, okay, people aren't actually making money and people are struggling, I was there. Believe me, I was there. I know what the emotions feel like. But if you have a little bit of resilience behind you, just keep showing up every day and keep showing up and putting in the work. Just sitting there and looking at a chart isn't going to do anything for you. Actually put some concentration into it, and I promise you'll do it.
Gareth, bro, where can people find you?
So my Instagram is Gaz Trade, and my TikTok is I think it's Gaz Shaw. But if you find
We'll
me
put it in the
Gaz
link.
Trade,
Cool.
yeah, I'll send you a link. But yeah,
No, yeah.
my Instagram is Gaz Trade, GAZZTRADE, and then you can find my TikTok from there in the bio.
Yeah. Check it out in the description. We'll put it in there, guys. Marcy, what about you, bro?
I think for me personally, as a forex trader, this has been the perfect opportunity to actually like learn about futures options. We didn't get to touch on equities as much, but to get that knowledge about what it's actually like, to me, find out that execution is perfect, literally zero spread. It's to me, it's a game changer, and it's definitely something that I can look into. And I think Gareth's strategy is actually a lot similar to how we actually look at the market, Sam, which is
Mm.
perfect because that gives me hope, and like it just means that the transition won't be as difficult as I thought it would be. So yeah, that's my final thoughts. And I also wanted to say shout out Gareth. Sam?
Yeah, literally, shout out, bro. I've probably done the most prep for an episode before this one because it felt so different to what we're used to. But at the same time, interesting in that you've sparked this curiosity of like, this future's maybe where I should be focusing on, given some of the challenges in the forex space. But I think regardless, just appreciate your time and what you've shared with the audience. I'm sure there's someone who took so much value away from this. And I guess to the audience, thank you guys. If you've made it this far, we really, really appreciate it. Here on the Modern Day Trader, we're trying to share authentic trader experiences and journeys through conversations like the one we've just had. And in that, we hope that, it will just help you navigate your own path towards consistency in an industry that can be super brutal and unforgiving, like Gareth shared earlier in his journey. And if you've taken any value from this whatsoever, please click that subscribe button right now and share this with someone you think could benefit from it. And as always, remember that consistency is the choice you make when you start doing the things you know you should be doing day in and day out. Gentlemen, thank you.